Have you ever looked at the stock market and thought, looks interesting, but I have no idea what's going on? You're not alone in this. But here's the truth, understanding the share market isn't rocket science. And if you're an entrepreneur or an investor, it might be the most powerful tool you're not using yet. Welcome to the Global Titan, where entrepreneurs become empires. So in this video, we'll be focusing on how the share market really works and just basically give you the 101s of what the share market is and what it can do for you and business people across the world. So let's focus on first understanding exactly what the share market is. Quite simply, the share market is a platform where investors buy and sell shares, which are units of ownership in companies. When you buy a share, you literally become part owner of that business. If that company does well, your shares become more valuable and you make money. So let me put it this way. Share market is also called the stock market. That's the term that I think that you've heard most commonly when we talk about the share market. And what do I mean by what I just mentioned earlier? So let's presume a business has 100 pieces. Business ownership is 100%, right? And every person wants to hold 1% ownership of that business. So what the business does is it goes to the share market and sells a piece of share that represents 1% ownership of that business. So that's literally what the share market does. But it's more than just numbers on a screen. It's a reflection of how the world does business today. Every innovation, every trend, every market crash, it's all recorded here, basically. So let me give you an example. When you buy shares in Netflix, you're not just betting on movies, you're betting on the future of streaming content creation and global entertainment. That's why share market isn't just for traders, it's for visionaries who understand exactly how an economy works or how a market works and where it's headed, basically. Stocks equal ownership equals power in a company. So that's what the share market is in not so brief terms, basically. So let me put it this way, basically, a little more explanation on how it relates to the economy here. So when you buy, when I mentioned Netflix earlier, well, now I'm going to mention something else. So when you buy, let's say, a share in a steel manufacturing company, you're betting on the fact the steel market is going to go upwards. In a sense, there's going to be more demand for steel and people are going to buy more steel. What does that mean? It means companies that are producing goods made of steel are also going to go up in value because I'm not saying they're going to go up on value, but you're betting that companies downstream who use steel in manufacturing have more demand, so they're also going to use more steel. So that is how interlinked the economy becomes when you're dealing with the stock market. It deals with most of the companies in most of the markets. Basically, there are big companies, and most of those big companies are in the stock market. So that's what you can understand when you're looking at a stock market, generally speaking. So let's move back to the more pertinent aspect to what we need to cover here is related to businesses, right? So next question is, why do companies go public, right? So imagine a private company goes public for one main reason. Basically, they need more funds, which means they need more capital. Launching an IPO or initial public offering allows it to raise massive funds quickly without taking on debt. That money helps the company scale, whether that's opening new offices, expanding globally, or developing cutting-edge products. So let me put it this way, right? So a company needs more money. There are two ways of going about it. Either they get debt, which is take on a loan, or otherwise they have people invest in the company, right? But going to individual buyers and having them invest in the company is kind of cumbersome, and it raises less money as compared to if you go to a stock market and offer your company's ownership through the stock market. And the IPO I mentioned is basically the first time that the company actually puts up its ownership stake on the stock market. That's simply what an IPO is. So based on that, what you need to understand here is that massive amount of funds can be raised through an IPO, right? So, and that can help companies push forward on their agenda on whatever they need to do. An important example here to understand is what I mean by massive amount of funds. So An individual like Facebook raised around 16 billion in 2012 and Alibaba raised 25 billion in 2014. And it is still one of the largest IPOs ever, Alibaba's IPO. And that is the sort of money no one single investor can give you. So the best way is to find a lot of different people interested in your company, buying stakes in it through the share market, right? And that helps you raise a lot of money. But it's not just about the money, basically. Going public gives the brand credibility, that because it goes through a very, very carefully vetting process by the stock exchanges to allow you to list on that stock exchange. So it gives the brand credibility, not only because of the vetting process, but also because of the fact that transparency is a required condition if you want to continue to be on the stock market. That means and this credibility, this brand awareness attracts top tier talent and creates liquidity for early investors and employees to take benefit of what they've built in the company. An IPO usually results in growth plus liquidity plus global visibility for a company. So that's why companies succinctly go public. Now that we understand that, how do you make money on the stock market? So as someone who's watching watching this video, that you need to understand there are two ways investors can make money through the stock market: capital gains and dividends. When we talk about capital gains, succinctly, as you can see on the screen, it means buy low, sell high, right? Buy shares at a low price, and when the price rises, you sell them at high. But at the same time, that is one way, and that is probably is more the most common way people try to make money off the stock market. The second way is dividends. So some companies share a portion of their profits with shareholders. Think of it as a reward for holding the stock. For example, if you bought Tesla shares in 2019, you'd have seen over 1,000% return in 2023, which is basically capital gains, right? On the other hand, Coca-Cola might not skyrocket, there might not be much capital gains regarding Coca-Cola, but it pays a steady dividend every quarter, a favorite of long-term investors like Warren Buffett. Your strategy basically depends on your goals. Are you a growth investor chasing innovation, or you prefer consistent passive income? The market has space for both, and it's up to you exactly how you want to leverage the stock market. Important Titan tip here: don't chase hype, chase value. Because people chasing hype always lose money on the stock market because they're gambling. So let's talk about the risks. Like with everything, when any business or anything in business, if there's no risks, that means that is probably not a true investment opportunity, but more like a scam. So the stock market has a lot of risks, but also rewards. Let's be real. Investing isn't risk-free. Stocks can crash, and entire sectors can collapse, and emotional decisions can ruin a good plan. The 2008 crisis wiped out trillions of the stock market. In 2020, COVID-19 caused the fastest bear market in history. Currently, Trump's tariffs caused a massive loss in the valuations in the stock market, loss of trillions. At the same time, that a lot of that loss recovered when the tariffs were pulled off a day or so ago. But guess what? The markets bounced back. Yeah, and those who held strong in their convictions and their investments saw massive returns, basically. So it's a strategy and a plan on how you make money in the stock market. Your risks must be balanced with your rewards, and that is the best way to invest in the stock market. The key is strategy, basically. Long-term thinking, diversification, and most importantly, education. The more you understand, the less you fear market dips. Smart investing is basically risk management plus patience plus strategy. Now that we understand all of that, what's the entrepreneur's angle on the stock market? We've talked about it, investors. But as an entrepreneur, what is your angle regarding the stock market? So, if you're an entrepreneur, the stock market is more than just a place to invest. It's a masterclass in business, basically. You learn how companies are valued, what investors look for, how branding, profit, margins, and leadership affect public perception. One day your business could be the next on the ticker of the stock market. Think about it. Amazon started in a garage. Now it's one of the most traded stocks in the world. The market rewards innovation, execution, and resilience, just like entrepreneurship. Entrepreneurs who understand the market build smarter businesses. So let's get started. How do you get started on the stock market, basically? a brief conversation on that. You can today platforms like Robinhood, Grow, E-Trade have and interactive brokers have allowed it. It made it easier for you to open a trading account in minutes. But again, don't jump in blindly. Start with research, follow business news, learn basic terms like PE, market cap, and volume. Begin small, maybe with just index funds or ETFs. And remember, it's a marathon, not a sprint. Titan tip: learn first, invest next. So let's wrap this up. We're just getting started. In the next few videos, we'll be going over more details about how you can become a a successful businessman, and how Global Titan would help empower you in becoming a titan of business. So with that, we're going to wrap up. Please like, subscribe, and comment if you got any value from this video, and keep hustling and keep growing your wealth and become the titan you always want to be in business. Thank you.